Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how you doing today?
I'm doing good, Joe. I sat out front this morning in the sunshine with my sidekick, Buddy, while the girls were jumping into their schoolwork here, the online learning, and so far so good. One day at a time. Today's going pretty smooth. That's all I can ask for, and so I'm feeling positive today. How are you doing?
I'm doing good. Sun is shining. It's a beautiful day outside. Got some work done already. Bunch of videos and podcasts, and we're here today, so good stuff.
Awesome, brother. Well, feel a video, or not a video, but a virtual hug from me over here, over in Seattle. I'm over here in the Ballard area, and we hope all of you are doing well and enjoying your family time and staying healthy. And speaking of staying healthy, super important topic we're going to jump in today is how to keep your credit healthy during this time of health crisis, which is now turning in obviously to a potential big financial crisis. And we need to be able to make our way out of this. And one of the ways that we're going to be able to do, the people that are going to have more opportunities, unfortunately, than others, are people that are going to keep their credit in check. So we have made this basically an emergency podcast today with our friend Joseph Kibworth, who's president and CEO of the Kidworth Group and Associates. They're a nationwide credit auditor. They're local here to the Pacific Northwest. And Joseph's firm provides consumers with assistance in credit auditing, finance, coaching, bankruptcy, foreclosure, defense, and settling debts. As we said on our last podcast with Joseph, you can think of Kidworth and Associates as the credit FBI. And I love that term there. So we're going to get in and check in with an update with all this stuff going on regarding things that are likely going to be choices that you're going to be making going forward here that are going to affect your credit. With that said, Joe is going to link podcast number 98, which is our previous podcast with Joseph, down in the show notes here, and I encourage you all to go listen to that first or second. Actually, you can listen to this first. Obviously, you're listening now, and go listen to that second. Get to know Joseph, his backstory, and all the major nuggets that will still apply today. I think we're going to add on to it now. So, Joseph, welcome and thank you for joining this on this emergency podcast for Seattle Investors Club and the nuts and bolts of real estate investing.
Well, I'm extremely grateful to be back and to be online with all of you listening to the podcast. Gladly to be home finally after 3 long months being out of the country. And I appreciate the fact that I'm healthy and I'm here just to bring some good news to all the audience out there.
Awesome stuff. And just for a little background before we jump into some details here, just give everybody a heads up today. We're recording this, but our wonderful school, St. John's School, which I love so much, where my girls go, we are having a drop-off of thank you notes that all the students of the school have made for the first responders. And then the school is going to take that. They're going to laminate them and clean them all up. And those are going to be delivered to the first responders, our nurses and doctors from our school. So we're going to cut to the chase today and get right into it without a lot of other chit chat, so we can make sure to deliver this very important message to our first responders that we all thank so much. So I'm going to jump right to it. Joseph, which states does your firm operate in? And, you guys have multilingual consulting, you're domestic and international. Just give us the broad overview of who you can help and what states or what languages.
We serve the entire country regarding credit. And we do speak several languages, which obviously, as we all know, our country is founded in multilingual languages, knowing the fact that people coming from other countries coming to the country and becoming citizens and more in the country and whatnot. So, anyways, we do speak several languages. We have some Chinese, we have some Spanish, we have some Italian, we have some French, we have some Russian, we have some German, and we'd love to add some more. The reason behind it is because the consumer whose first language is not English, they feel more comfortable speaking their native language, and that's always a plus. But as far as internationally wise, we do other things overseas, but now we're focusing now on credit in the United States, just to help the folks to get ahead on the game and understand the basics of credit and how to protect themselves in the event that they might see some discrepancies on their consumer credit report.
That's all great stuff. And if you guys, this is a wonderful time that you can, if you are a real estate professional, a real estate broker, or probably basically any industry that you're in, it's a great time to partner up with somebody like Joseph and the Kidworth Group and Associates to bring value to all your client base, to help them through this tough time with credit counseling, whatever industry that you're in and that you're listening from, or for your family. The message that is best today is just simply one of assistance and help. Nobody needs to be salesy or pitch anything these days. The best message I think out there right now is just to be of service and to help people. And, that will return abundance to you, is my belief. So with that said, hey, Joseph, and again, everybody can go back and listen to extra details in podcast number 98, but what's your assessment of what's going on? There's a lot of financial relief being offered out there at this time, but it is a tempting time to take advantage. I don't want to use the word take advantage. That's the wrong way to say it. It's a tempting time, whether you need it or not, to accept financial assistance. But there's talk, which is warranted out there, that maybe not all those things are going to be great for your credit. But what do you think about what's going on today? And how that affects everybody's credit with this health crisis that is obviously putting us in a financial crisis as well.
Obviously it is nobody. It's myself. I was not expecting anything like that to be happening, really. But again, we have to have some sort of a plan B, and plan B is very important for emergencies like we're facing at the moment. Now, in regards to financing credit, multiple banks, they do have a COVID-19 program, and it is just a matter of the consumer contacting the bank and ask for the program. And they do have programs for car loans, for credit cards, for signature loans, mortgages, investment loans, and so on. Each program is a bit different. And for mortgages, they do ask certain documents just to get you approved, at least for 3 to 6 months, to defer the payment. On credit cards, some banks, they are reducing the payment down to interest only for at least 90 days. Some other banks are reducing the minimum payment down to 0 without taking any negative impact on your credit report. On car loans, there are certain banks who are actually reducing the loan down to 0 as far as the minimum payment for at least 6 months. Other banks are just taking it down to interest only. It's just a matter of calling the bank and ask whether or not you qualify for these programs. For what I understand, and I have spoken with certain banks, the loan must be on time in order to get approved on some of these programs. If you're behind on those loans, they might work with you, but in a whole different capacity. It's just kind of on a case-by-case basis. I do speak with the consumer in regards to, look, if for some reason the bank cannot get you approved, well, it's time to prioritize. You need roof above your head, and you need to feed the family. So you might take a dent on your credit report, but then that's something that can be fixable down the road. So you kind of have to weigh what's best for you at the moment. So that's
actually one of the questions I wanted to, maybe cover you. And I don't know if this makes any sense, but, there's going to be, like, if people are, if people are stuck where they can't pay everything, we on the nuts and bolts of real estate investing in Seattle Investors Club and our online weekly call, especially with our friend Jeff Watson, who has been really, really plugging us into some of these different programs. But the main talk that we are all talking about is that taking advantage of, for example, the forbearance opportunities. I don't like that word, opportunities. The forbearance assistance that's out there. They say they're not going to report it on your credit report, but we all believe that that is not necessarily true, and that they're going to essentially get you in another way where you won't be able to qualify for stuff if you engage in the forbearance now. That maybe there's going to be some forms or some things that you have to certify to when you go to refinance later that you won't be able to qualify. Might not have got reported on your credit report, but maybe they're going to make you certify that you didn't take it. All kinds of stuff could happen. And, I don't think we want to focus today on like mortgage forbearance, because that is an ongoing conversation happening all over the place and every place. But I do want to ask you about, like, is there a strategy that if you only have so many funds to pay your bills right now, is there any type of strategy like paying down your balances on your credit cards to like a 25% limit or something like that? If you can't pay it all off or you can't make all your payments, is there a pecking order or any strategy to keep your credit intact or build it while this is going on?
Well, in a normal world, maintaining a credit card under 25% is just it's just the key. If you want to maintain a healthy credit score, if you really want a perfect credit score, just keep it under 7% of the credit limit each credit card that you might have. That's in a normal world. Now things completely change now from one corner to another. So I do tell the consumer, look, if you do have some savings on the bank and you do not need to utilize any of these programs, don't do it, because there's people out there who really needs it just to get ahead of the game. And if someone has a huge savings on the bank account, it just doesn't make any sense. Just go ahead and do the minimum payment for now. And then when things get back to normal, eventually, we just don't know by when, then go ahead and make your paid it off or just keep it on the 25% or whatnot. But if you need to utilize a bill of credit, and that's for those that perhaps do not have a lot of savings, then use the card just enough to get by. Because yes, the bank might reduce your payment down to zero on a month-to-month basis, but then make no mistake, that $5,000 credit card that you had a balance of $500 and now it's $5,000. Now your payment is going to be over $150 a month, something that you couldn't afford. So just be really careful. So I do tell folks, if you do have a savings, just don't apply for these programs. Let those who really need the program. And for those that do have a savings, just trying to maintain those credit card minimum payment. Don't try to pay a bit more. If you utilize a bit too much credit, just do the minimum payment. Eventually, things will get back to normal in regards to credit once it's paid down. You don't have to pay right away. If you need to buy a home or buy a car and and you're in a desperate situation to need a card right now, then if you want to utilize the savings to pay down your credit card just to boost your credit score, then by all means, go ahead and do that. But if you have any emergencies at the moment, as far as purchasing anything, just do the minimum payment and keep the savings in the bank, because right now it's very uncertain of what's going to happen down the road.
So here's a tough question. If people are having, and I don't know if you have the answer necessarily, but if people are having, I'm just talking out loud here, guys. I'm making this stuff up, thinking about things that I'm just a normal one of you guys, just an average citizen here. And these are the things I'm wondering. If you have, let's say, mortgages, auto loans, student loans, and credit cards, or small business loans, there's probably some sort of financial program out there that you can plug into. And you can find those everywhere these days. Everybody's talking about it. But is there any type of pecking order on like, for example, obviously your mortgage is probably your biggest expense, right? And you guys, can follow along with all the discussions and and your own mortgage lender, and the good mortgage lenders out there will even tell you, beware, right? Don't take the forbearance if you don't need to. Because it might negatively impact your ability to borrow later or to refinance later. But when it comes, let's put that aside for a minute. How about when it comes to auto loans, student loans, credit cards, things like that? Is there a pecking order of, if you just can't pay everything, or you're going to be short, to keep one type of credit, one of those things more paid than the other? Or are they all kind of on even par when they start negatively affecting you?
To answer your question, let's put our priorities straight. Which, number one, you just said it, your home. Then obviously you'll need food to survive, and in order to get there, you're going to need transportation. So, as far as credit cards concerned, if you cannot afford to pay your credit cards, but because you have to keep up with the car loan and the mortgage, and obviously food for the family, then you might have to let those go. Again, it will dent your credit, but then this is something that can be repairable down the road. So it's just a matter of priorities, which in this case, your home, food on the table, and any transportation. So those are the three essentials that obviously we need in order to survive in any crisis, or even in a normal life. As far as credit card concerned, well, there's that program that I was just talking about. If you feel like, hey, you qualify for a COVID-19 program with your local bank, as far as your credit card concerned, they might reduce it down to zero on a month-to-month basis. In fact, I have spoken with Capital One and asked these questions, and they said, look, we will reduce the minimum payment down to zero on a month-to-month basis. So every month you might have to call every month just to make sure they reduce it down to zero. But do not utilize the credit, because again, like I said earlier, that's just going to increase your balance. And then when things get back to normal, then you're going to have a huge monthly bill. So that being said, on my opinion, home, food, car, that's it. Those are your priorities. Everybody else, they might have to wait.
Right. And but do we know, I don't know, because I'm not, I'm lucky enough not to have any car payments. Are they even allowed to do any type of repo or anything like that these days? Do we know anything on that?
The banks, great question. The banks are just functioning like any normal day. The difference is that just have a special program for those who are struggling making the payments. If you cannot make your payment at all on the car loan, and that's the end of it, well, you just have to turn it over, or the bank will come and pick it up. But the bank is trying to do their best to maintain and keep those customers, as they're back in 2008, where everything just went down the tubes. Now the banks are playing a little bit smart by creating this type of program to keep the customer on file. Why? Because they don't have to worry about there's going to be any losses. At the end of the day, when things get back to normal, then they'll go ahead and keep making the car payments as normally, as opposed to repossess a vehicle now. Then, because the economy is bad, a car that used to worth $20,000 now is not $20,000. Now it's maybe $7,000 or $8,000. So that's a huge loss. Now, is the consumer going to pay that because they no longer have the vehicle? Probably not. And that's when we see bankruptcies on the horizon very soon, very, very soon. So that's why the banks are just maintaining their normal standards, just added just a little feature called COVID-19 program. That's it.
Yeah. Crazy stuff, right?
Right.
But there is no, are they saying that, have you heard anything about credit reporting related to, these types of things? Like if you're getting that zero interest on your credit card and you're saying to call every month, right? Which is a great tip. Call every month to everybody that you're making payments to and see what you can get done for that month. We're not talking about your mortgage necessarily. We're talking about all your other stuff you have to pay for. What's the word on credit reporting related to taking, zero, not paying on the auto loan or taking advantage of the COVID-19 program for credit cards and auto loans and stuff like that?
Sure. Each bank, once again, with this program, they are not reporting it as a late payment. So no, it will not take a negative impact on your credit report.
Is that everybody, or you have to?
That's not each bank. That's certain banks that I have spoken with. For any other bank that I haven't, I highly suggest to the consumer to contact them direct for further information in regards to whether or not they do have a COVID-19 program for their clientele. But for instance, Bank of America, Chase, Capital One, USA, Key Bank, I have spoken with major bank, BCU, Navy Federal. I've spoken with all these banks, and they do have their program. And no, it won't affect your credit. You will not see a negative impact as long as you make, whether it's an interest-only payment on a car loan, or whether they will go ahead and reduce it down to zero for the following month. It will not affect your credit whatsoever.
Well, what sucks about the car loan thing is that you're making an interest-only payment, and if you recently got your car loan, it probably is all interest anyway, so you're not really getting a reduction.
If you recently got the car, I had a conversation with a general manager from Hyundai, and what Hyundai is doing now for those who purchase a vehicle and for some reason they lose their job due to COVID-19, and they will pick up after 6 months worth of payments. So technically, you don't have to pay for 6 months. But then again, if you buy a car now, and then you lose your job, then you will need to contact the bank who financed you to find out whether or not they can get you on the program. Due to the fact that it's probably a brand new loan, I am not quite positive whether or not the bank will approve you. The consumer need to call the bank and ask these questions directly.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. Let's shift for a minute. Is it possible, or do you know anything, is there a way to add, like if you're paying rent, add that to your credit report to help increase your credit score? Is there something out there like that? Does that make any sense?
You could add, all three major credit bureaus are allowing the consumer to add their rent payment into the consumer report, as well as utility bills, water, cable, sewer, and whatnot. Those are obviously a feature that all three major credit bureaus they open out there for the consumer.
Now,
So
if somebody that's paying your rent and utilities, and you're choosing to pay your rent and utilities versus being able to pay, or getting a little bit behind on your credit cards or things like that, is that a recommended thing? Like you have it here, you can add in your rent and utilities on your credit that you want to pay to keep your housing in order, like we said, on the pecking order of house, shelter, food, transportation. But then you get on the other side, you get a delayed ding, or hopefully you get a pass on your credit cards and your auto loans and stuff like that on being that affected. Would that be a way almost to, if you're in the category of paying your rent and utilities on time and everything, as a way to build your credit right now?
Unfortunately, it is not going to do you much, because based on years of experience in the industry, one negative remark can truly cost you tons of points. And we're talking about 60, 80, 90, even to 100 points. So having a couple of utility bills helping you to build your credit, it's not going to compensate for the large loss that you just took. Might help you with 5 or 10 points here and there, but at the end of the day, it's not going to really help you much.
Got it.
Yeah. So, and just so you know, the longer is the history of the trade line, the better it looked. Obviously, more stronger will become. Why? Because an underwriter looking for a 3 to 5 years history on them. If it's something brand new, it's not going to do much to your consumer credit report.
Okay, so if people have multiple credit cards and they've had one for 10 years and they've had one for 3 years and another one for 1 year, right? Should they be focusing, keep the balances, like you said, keep the minimum balances paid, but should they be focusing on using or doing something with that longer term credit card that they've had? I mean, a lot of people in our world, real estate investors, for example, right now, they're out saying, I'm going to max out my available credit lines because I want all that available to, in case there's opportunities that arise as I'm going through my real estate investing or my business related to real estate, that I want to have those funds available. So, people are wanting to get those HELOCs in place, and they're wanting to up the limits on their credit cards at this time. What do you think about that?
Okay, so there's a plus and there's a negative to it. The negative to it is obviously if you get to maxed out a credit card, you're going to take a negative impact on your credit report.
Even if you're making a payment?
Correct. It's because it is considered as a high-risk borrower now. So there's categories on the consumer credit report that will put you in, whether you're under 7%, 25%, 50%, or 100% credit usage. So those are different categories.
Available, but you haven't used it. You have it there waiting to use it because you're going to use it to make money. You can, buy your supplies at Home Depot or whatever. What if it's just available credit and not maxed out?
Well, the rule of thumb is 25%. Whether it's $50,000, $100,000, or $150,000 credit card. So the rule of thumb is 25%. Once you go above that, immediately you're going to take some hits on your consumer credit report. And we're talking about score-wise. That's why it's important to maintain it under 25%, because it's showing a consistency that you are not living off credit. Although you're buying, say for instance, as an investor, you're buying materials for a fixer-upper, right? Well, the credit report cannot recognize whether you're buying material for a fixer-upper or spending $5,000 at Best Buy on a brand new 4K, 82 inches TV. There's no way for the system to recognize it. It just recognizes it as available credit. That's all it is. So the negative is you will take a negative impact on your scores. Now, for those who were struggling financially, and I might not. Well, I'm going to say this. I I think is something that can probably help you out a bit. If you do have a credit card, and understand that you will take a negative impact on your credit report as far as credit score wise if you maxed out the card. But if you need the cash and you need to utilize it to survive, I highly suggest to, if you can put the cash in your bank account, do an automated payment with your credit card so they can take them at least the minimum, but at least you do have cash flow on your bank to survive during these difficult times. So the bank will take the minimum payment from the money that you technically just borrow against.
Got it.
So that's something that if someone, but make no mistake, this credit scores will go down. But then again, you're going to have $5,000 on your bank that you just borrow from your credit card because that's cash that you can utilize and
some
just
high
have
crazy
it.
interest rate, right?
What was that?
Some high crazy interest rate if you do that.
That's correct. Some of those run in between. Well, credit cards are attached to the market. You know, 21%, 23%. It depends what the market is doing, really. Now the market went down, so interest rates went down a bit on credit cards because it is an adjustable rate. But then again, if you do need the cash, and those are for the folks who are, trying to survive and they just don't have any money in the bank. Well, if you can get some cash out from that credit card and put it in the bank and just keep doing the minimum payment, an automatic payment every month, and just be wise how you can spread those funds until things get back to normal. But remember, you will take the negative impact on your credit report. Now, for those who just want to invest, as soon as you run that credit card through the system, that's going to show up on your credit report within 24 to 48 hours that you utilize more than 25%, and you'll get to see that dropped on your credit scores.
Is there a time of the month? I know the answer is on time, but during a, let's say, 30-day month cycle, is there a time of the month where the 25% is, where that threshold or that benchmark is looked at, or is it a daily look, or what is it?
It's daily, because that's why your credit scores changes every 30 days. From the date that you utilize your credit, make no mistake, within 30 days, your scores will fluctuate based on the usage of your credit.
Okay.
Yes. Now, here's just one more point that I do want to mention for those who are listening. If you do utilize your credit card now, it doesn't mean that within 30 days, you will the user will reflect on within 30 days. No, it will take 60 days. Because what happened this month is not going to show up next month. It will show up on the following month. So
So does that mean that if you, let's say you put $10,000, I'm just using a number, $10,000 on your credit card, and the goal is to keep the balance 25% or below, or even 7% or below, that if you pulled it out now, that you have 60, but as long as you're making your minimum payment, you have, I wouldn't go with the full 60, but let's say you have 50 days to get that paid down to the 25% before it reports. Does that make any sense?
No, it will report because it already has been recorded.
Okay.
It will report unless you do a rapid rescoring, which takes about 48 to 72 hours, and you're paying for it. Remember, the credit bureaus are money-making machines. As long as you're paying a fee to get something done immediately, they'll do it for you. But if you want to just do a normal cycle, is every 60 days. If you utilize a credit card today, let's say, what's today, the 8th? Or is it?
Yes, the 8th.
Yeah, the 8th. So let's say, for instance, you have a $10,000 credit card and you went ahead and just, rent 10 Gs or at Home Depot. Well, that will reflect on your credit, not on May, but in June.
Right. So that's what I'm saying. Like, let's say I needed to go to Home Depot and I'm trying to keep my balance, my credit at the 25% or below. And I go right now to Home Depot and I spend 10 grand. Do I just need, aside from making my monthly minimum payment, so I'm making my payments on time, do I just need to get that 25% balance down by June, or do I need to keep it down?
Unfortunately, that has been recorded with the system, and whatever activity happened from that billing cycle will show up within 60 days. It's not going to change unless you paid, what is it, 70 to $150 to a mortgage broker to do a rapid risk scoring.
Got
Then
it.
the credit bureaus will go ahead and change it within 48 to 72 hours because they're getting paid. But if they're not getting paid a dime, then you will have to wait for the following month. But whatever happened from now until this billing cycle will show up on not on the next one, but the following one, which is June in this case. So that's just the way it is. So then whatever happened in May is not going to show up on July. It will show up in August. So June, forgive me. So that's the billing cycle with the credit bureaus. Every 60 days, you get to see what you did 60 days ago.
And how does somebody do the rapid relook there?
Rapid risk scoring is very straightforward. All you have to do is just provide documentation that the account has been paid down to 25%, 7%, or even paid off. Then provide the receipts. The mortgage broker will go ahead and do a rapid risk scoring with the credit bureaus. They have a certain documents they filled out. They have to send these out with proof that the account has been paid. And then the credit bureaus will go ahead and make the proper changes within 48 to 72 hours. For those of you who want to buy a home and they need to get that score up quickly as soon as possible, just go ahead and do that. Pay your credit cards down to zero, get the receipts provided to your mortgage broker, and have the mortgage broker do a rapid rescoring. Within 48 to 72 hours, your scores will change dramatically.
Good stuff. Good tip. Good stuff. What mistakes do you think that people are going to make, that you foresee during this crisis, that people are going to make with their credit?
Number one, just hiding, not educating themselves with what's going on. Forgive me, I'm home right now. My dog is...
It's okay. Real life is okay. We prefer it.
No worries. The main key is to inform yourself. If you chose not to, then obviously nothing good is going to happen. Your credit score will go down the tubes for the lack of educating yourself. I tell everyone, look, watch the news once in a while, at least once a week, just to inform yourself about certain things versus not knowing. So, for instance, the podcast that we're doing now, we would love everybody to listen to, because there's so much juicy information that will help you to protect yourself. So, but the biggest mistake is just being ignorant. Just completely ignore that nothing's happening, and next thing you know, you're stuck in a hole.
Exactly.
Max out your credit cards, hoping that when things get back to normal, you can pay them off. That's a huge mistake. Just again, just sort of balance things out. Because in the end, if you can't pay this loan or this credit card, guess what? We're looking at a bankruptcy 3-6 months down the road.
So, everybody needs to keep their credit cards to the point where they can make those minimum balance payments.
Exactly. Because it is fun just to, swipe that sucker all the time, right? But then again, make no mistake, your minimum payment will increase, and next thing you know, you got a $250 minimum payment on a credit card, which is, think about that, $250 is a car payment for some people,
right?
And but you just went ahead and, knowing the fact that you had the cash on the bank just to buy groceries and whatnot, but you chose to use a credit card instead. Well, that's going to hurt you.
Let me cover it one more time, just because our listener base is probably more of lots of the people in the type where they're like, let me increase my credit lines right now to make that available. I won't necessarily pull it until I need it, right? The deals are not necessarily out there that everybody's buying right now, because our real estate market out here, at least in the Pacific Northwest, is still, as of this week, on fire. And we are having 50% less listings happening, which is obviously less supply available, but the demand is still there right now with interest rates so low. So, people are are just closely watching. And again, they're joining us on our weekly, our weekly online meetup that we're all staying ahead of the curve. Probably not the right words again to use. Sorry about that. But we're all, staying informed,
Sure.
with each other peer to peer weekly on this online meetup, so we can, get the feeling off the streets from all of us, sharing and collaborating on, when things are changing for landlords or for people that are flipping houses or lenders and so forth. But our crowd, a lot of them, like I said, want to maximize their credit lines right now, but not use it. So I'm just I know I'm repeating myself here, but tell us one more time, opening up our credit lines larger, if we can get approved, and not using it is going to take a hit on our credit.
Correct, because they're technically applying for an amplification of their current status regarding loans. So they're going to pull a hard inquiry on your credit report, and it will take a hit on your credit.
Is that, some people here are probably thinking, well, I'm willing to do that to have access to the cash when I need it, because I can make, money. There's opportunity potentially in front of me that I can way more offset that. What do you think about that?
That is actually to discretion of each person. What they need to do is just be wise, because having that chunk of money on the bank and not knowing how to utilize it based on the credit system, it can trigger something really bad. So you got to be really, really careful. So
got to do some budgeting, guys, and make sure everything is maybe set up on like an auto pay, so you're making those minimum balances, right? Those minimum balance payments. And is there a way, Joseph, I haven't even thought about that, I'm just thinking out loud here, to set it up where you are, if you are one of the lucky ones to have some cash available and you're using your credit card for things because you're continuing your life right now, is there a way to set up your payment where it automatically on the due date pays it down to 25% of the balance?
Again, each bank worked a little bit different, and you can. In fact, you have options. For example, on my Navy Federal, when I make a payment on my credit card, just give me three options. You want to do minimum payment, you want to do a little bit more, or you want to pay it off. So you can set this up automatically. So this will allow you to monitor and control your finances a bit better.
Right. So there's not like, you can't say pay 75% of my balance off. You're gonna check your balance and you're going to make your payment, and pay it down to that 25%. But here's the thing. This is kind of a ding dong question, but if you're paying your balance down to 25% and then you're going to go use your card, shouldn't you pay it down to zero and only use 25% of it?
Well, again, that 25% is very important to remember at all times. But if you pay it down, you mean pay down or pay it off?
I'm saying, like, if we're trying to keep our balance at that 25% or lower to keep our credit still working in our favor, the most favorable that we can, if you're paying your balance down to 25% every month, and then you're using your card during the month, your balance is above the 25%. So I guess I'm saying, I'm being a ding dong, and I'm saying it makes more sense to pay it off and then just only use 25% of your credit on that card to keep it in that 25% range.
Right. Yes. But it is always good to have at least a small balance on your credit card. The bank, they want to know that, hey, you are utilizing the card, because they obviously want to make a bit of money as well. If they see that you pay this off every month, then it makes no sense for the card to be open. They might close it.
Yeah.
There are two reasons why the bank would close a credit card: is for the lack of utilization, which in this case, paying the card off every month, and number two, constantly they pull the consumer's credit report just to see where you're at with the credit scores. And if you do not meet the criterias as you did when you applied for the credit card, they might close it down.
Okay, well, there's a something to keep in mind, everybody.
Or they will reduce your $50,000 available credit down to $2,000.
Right. So, last question before we jump off, so I can deliver the very important care package here off to our first responders with our school. And again, I might be repeating myself, but do negative things related to payments, is there a pecking order? Like, auto loans hurt your credit. If you miss payments or you do something wrong, it is what it is at this time. Do auto loans hurt your credit more than student loans or credit cards? And once we get to the cleaning up phase here, where people are having to deal with their situation and clean up their credit later, that's going to be a lot of people, right? Regardless of, everybody we know, as everybody's situation is different. Are there easier things to clean up than others? Like, it's easier to clean up missed auto payments than it is medical late stuff, or easier to clean up credit card, late fees on your credit. Like, what can you clean up faster? Does that make sense between?
Sure. I understand your question. Before I answer your question, I do want to say that it is, for those of you that might have some savings in the bank and they're doing fine, but their credit is messed up a little bit, it is a great timing to fix your credit. Why? Because within 6 to 12 months, based on where we are now, the economy is not going to do so well. So it will be a great timing for purchasing investment loans or home loans or car loans. That on that section. On the second section, regarding what's easier to remove from the credit report, each category is different. We have medicals, we have standard collections, we have late payments, repossessions, foreclosures, and we have public records. Every single one of them, we treat them a little bit different because they have different laws. Now, there are different violations on each one of those. So, for example, on medical collections, if a collection company is collecting on a medical, we all know the HIPAA protect our identity. So that is a violation. So they're a little bit easier to work on those because they're violating HIPAA law. On credit cards, we just base it on validation. If the bank cannot produce anything to validate a late payment, their responsibility is to remove it, period. So
are going to be so effed up right now that they won't have the time or ability to do that?
It's going to be, the system right now is getting overwhelmed because of what's going on at the moment.
I mean, couldn't that work in our favor in that?
It does, absolutely, 100%. So, but it's just a matter of calling the professionals who can guide you through this process, as opposed to you trying to do it yourself, now understanding what you're doing.
Bingo. Yeah.
Simple as I spoke with somebody just yesterday from New York. She said, a real estate agent. She said, look, I just talked to my best friend. She's a real estate agent. And he said, you know what, that you can actually fix your credit. I can probably help you because it's easy to do. And I said, you know what? She's absolutely right. But let me ask you a question. If your car breaks down and you're not a mechanic, but then, you can get a manual how to fix your car, will you do it yourself? He said, well, probably not. I said, well, it's the same exact thing. That's why there are professionals with experience who will help you to get there sooner, as opposed to you trying to do it yourself. It might take you a year or two, just like a real estate agent. I don't know anything about real estate. Am I going to buy a house on my own and see if I can do well? Well, if I need to expedite this process, I'm going to pay just a bit of money just to have a professional to take care of it. So it is the same exact thing. We could do everything ourselves. We have a speeding ticket. We could represent ourselves in court. If the car breaks down, we can fix it ourselves. But at the end of the day, when you hit that wall, what are you going to do? So
have key players on your team, everybody, to help you manage through this crisis. That's exactly why we've made this kind of emergency podcast today to remind you that Joseph and the Kidworth group is out there to help you navigate through this. We're putting this podcast up in front of others that we have recorded just because we want to make sure to be timely with the content that we're giving you to help you now, not releasing it, 3 weeks from now when, you've made some bad decisions for yourself. So, that's all good information. So, let's go back to that for a second. So like we said, the medical related to the HIPAA, that could help get that removed for you. Credit cards, they have to, what'd you say? They have to do something, prove the balance?
They have to produce multiple documents to validate a late payment, a charge-off, a write-off account. A collection company, they also have to produce documentation as well. Public records, we deal with public records through LexisNexis and the court because they're not affiliated with the credit bureau. So we utilize those loopholes to try to get that stuff removed. In fact, a couple of days ago, I posted on my Facebook wall one of my clients joined this. Our services about 6 months ago, and all 3 credit bureaus deleted his Chapter 13.
Wow. Yeah.
You can actually look it up on my Facebook. It's right on my wall and it's public. So I'm not making this up. So you can see the power of knowledge.
Right. Guys, like we said, going to the doctor, you go to the doctor. We're talking to Joseph here because he's our credit doctor. Right? You're going to need key players on your team as you navigate and move forward here. And I think, that topic that we just covered here at this last part is of high importance to everybody in regards to cleaning up your credit report if you get some dings here going forward, right? You want to get it cleared up right away. You want to manage that. Don't wait, start the process now, manage through the process now, talk to Joseph and his team about your situation and the choices you're having to make and let them help you guide you through the process. If you're somebody that is going to need that help at this time. So, all good stuff, Joseph. Do you guys have any type of, I thought I saw some sort of webinar or something coming up. I imagine, we're all real, a lot of us on the call are also real estate professionals, and what a great partner for you if you're a real estate broker, or if you are even a wholesaler, right, out there, or if you are an investor that, you want people to have good credit. It's the time to help each other, guys. It's no matter if you're talking to people, no matter what lane you're in regards to our real estate business, credit is of the, paramount concern these days, protecting it and repairing it. And I recommend that you all, take a moment to maybe think about who you can partner up with in regards to that, to help everybody in your family, your friends, your clients, which will in turn, of course, help yourself in the real estate business as well. And here on the Nuts and Bolts of Real Estate Investing, we would like to introduce you to Joseph Kidworth and the Kidworth Group and Associates. As a trusted partner for you guys to move forward in this today. It is 12:30 p.m. and I am highly sensitive today to get off and get the things I needed to be over to our school here today. So I'm going to have to wrap it up there with you guys. Do you guys have some sort of, I thought I saw some sort of webinar or something that might be coming up. That might have been something else I was looking at, Joseph. Is there something coming up? What's that?
Absolutely. Tomorrow we do have a webinar. It starts at 5 p.m. And then it is online. It's a free webinar on Facebook. You can just hop into our page, Kidworth Group, on Facebook, and actually Maria is hosting this webinar.
Is it going to be a weekly thing? Because
it is a weekly thing. We plan to do a weekly thing, and it's more technical about how you can utilize your credit. What's the best way? Just technical things that the consumer should know. This is just educating the consumer now because it is a need. So every week we'll have a free webinar on our site on Facebook, Kidworth Group.
Okay, guys, Joe and I are going to connect with Joseph offline about this, and we will make sure that that gets posted into our Seattle Investors Club Facebook page, wherever you are. This isn't a time of we're in Seattle, you're in California, or you're in Florida. It doesn't matter where you're at, because we're all talking about important issues that are national and frankly global. So we invite you all, if you're listening from other states and outside of the Seattle area, to jump on our Seattle Investors Club Facebook group, where we're going to continue to post this information. And again, also, Joseph, if you join us on Thursdays at 11:30 a.m. Pacific time, the Seattle Investors Club online weekly meetup, where we're all peer-to-peer, supporting each other, sharing good information. On that call, we have a chat box where everybody can drop in helpful links that they've had on the topics that we're discussing. And we are recording all that, and we are reposting and sharing all those links that people drop into the chats. So I highly recommend that you join us just to stay informed. If you can. Again, those are going to be recorded, and you'll be able to find those. Joe, actually, we're wrapping up here. Why don't you tell everybody where they can find the details of today's podcast, and as well as the recordings of our weekly online Seattle Investors Club meetups, and grabbing all those links that all our peers and our friends, which we thank you so much, are sharing with us. This is something we're going to do going forward, because the value is so awesome. So Joseph, thanks again. We'll be talking to you again. This is going to be an ongoing conversation that we have with you on the nuts and bolts of real estate investing, as well as, and of course, inviting you to join us weekly on that meetup call. So thanks again. Absolutely. Joe, where can everybody find the details?
Yeah, so the details can be found at seattleinvestorsclub.com/114. That's seattleinvestorsclub.com/114. And if you'd like to get involved with our weekly meetup, go to meetup.com/Seattle Investors Club and make sure that you subscribe there, and then we'll send you that link to the meetup, the online meetup, every single week.
Awesome. And if they can't make it, they'll be able to get the recording of that as well, right, Joe?
Absolutely. The recording is going to be posted on our website, seattleiinvestorsclub.com, every week. And if you're a member of our Facebook community at all, you will be notified of that via Facebook.
Please make sure we have your contact information, guys, so we can get this valuable information and share everything that your peers are discussing weekly. And the best way for us to get your contact information is simply, Joe, you'd say if I'm wrong, is to join our Facebook page, our group page at seattleinvestorsclub.com. There'll be 3 questions. One of those questions will be to drop your email in there, along with other topics asking you what you'd like to talk about. And that's the best place for us to gather that contact information. Is that true, Joe, or not?
That is a great way to do it. Yep.
Okay. Okay, guys, check in with our meetup page weekly. And again, thank you, everybody. Remain safe and healthy, and we will talk to you again soon.
Thank you.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.